Traders, Cousin Vinny coming to you from theclosingprint.com on December the 30th, 2018. In this edition of your weekend video newsletter, we'll discuss the indices, all of which closed higher, creating an inflection point last week. We had the London Stock Exchange, Nikkei, FTSE, Hang Seng all lower, and the Bombay Stock Exchange was higher. The bond stock ratio did inflect. It is short and long-term bullish at the present time. HYG and junk did bounce as well, and we have the Dow Composite at extremes looking for a follow-through this week on a 3-candle reversal on the weekly time frame. We need a follow-through, and the S&P 1500 remains on a sell signal, though it does look like it's trying to create a pivot and turn higher this week. All of the leading tech stocks were higher last week, led by Amazon up 7.3%. Tesla also looking pretty interesting on the week. All the other tech stocks that we follow looked very bullish, looking for a follow-through this week. And we had institutional sentiment turning bullish at the end of the week. Breadth indicators have inflected and turned higher. NIMO and NAMO are beginning to show signs of a turn as well from extremes. We have the S&P equal weight A50R at extremes 8% and oversold. That looks like it's going to continue to move higher. It's more bullish from these low levels going forward. And we had NYHL near zero about to cross. High-low percent is below the February 2016 lows, which was 1.72%. In addition, we have the New York Stock Exchange advanced decline. Looks like it wants to come out of the red zone this week. So watch for advancers to continue if you are bullish going into this week and the last trading day of 2018. The put-call ratio went from 1.86 down to 0.78. Extremely bullish down to extremely bearish within a short period of time. So watch, there could be some short-term resistance to start the week. Hopefully we'll finish on an up note. Just something to keep in mind. VIX also faded towards the end of the week at 28.34. We have the bullish percent at 20.68, which is below the August 2011 low. That was the S&P Standard & Poor's downgrade of U.S. Treasury debt, which hit 21.23. So we are at an area where we've seen sustained bounces in the past. Just keep that in mind as well. U.S. dollar faded further at 95.96. The yen was bullish. It did break out last week, following through this past week. And we have the British pound U.S. dollar continues to trend lower. All the yields were lower. Bonds were higher. The weekly time frame continues to show investors are interested in safety. So we'll look for that to change. We did see on Thursday, however, a big shift in allocation by institutions where bonds were being sold and S&P 500 was being bought. Commodities showing a bullish trend. We had gold higher. Copper was lower, however, and also West Texas crude down 44.91%. We have the heat map, mostly lime green and greens, with materials and gold looking good. We have international markets, oranges and reds, with India leading, looking the best. We'll look at some IBD 50 names, and we'll look at some MarketSmith Growth 250 that are showing relative strength. Bolkowski finished the week 5 of 5 green on his indicators with a CPI signal half green on December the 26th at 0%, which is bearish, with 0 bearish patterns, 0 bullish patterns, and 370 patterns waiting for breakout. That's not a misprint. SPY Weekly did bounce from a 50% Fibonacci level from the 181 February lows up to the 293.94 highs. So we're looking for a follow-through this week. RSI is oversold and volume is above average once again. The daily did see an oversold bounce after a 20.47% drawdown from all-time highs. At a minimum, we're looking for a bounce back to The 260 zone, give or take, as tick cumulative continues to show buying has trumped selling over the last few trading days. Rinko continues building white bricks. We're looking for follow through there as the cycle turns up. And the SPY 60-minute chart continues to build higher highs and higher lows. We're watching for these pivot lows along here to hold, as well as volume by price and blocks in that zone. And more importantly, we're watching tick as well. We want to see this trend continue to point to further upside with resistance levels overhead at 260, 260, 250, as we pointed out on the daily chart. NASDAQ weekly also showed a bounce last week. RSI is oversold and turning, looking for a follow through and for volume to begin increasing as well. NASDAQ daily also giving us a cycle turn from extremes, looking for this to continue as rate of change decelerated going into the middle of the week and has started to turn more bullish. Looking for a follow through now, at least back up to some of these higher levels in the short term. A little back and fill along the way. 6,500 looks like a first stop, and then these pivots overhead around 6,700 in the short term. In addition, the NASDAQ 100 has 10% of stocks trading above their 50-period moving average. When we see extremes like that, we look for a follow-through bounce in the short term. In addition, we also have the 60-minute tick cumulative bottoming on 26th, turning higher the following 3 days, looking for a follow-through in the short term, as more stocks are bought on an uptick versus those are being sold on a downtick, in addition to the advanced decline on the NASDAQ. Small caps showed very similar price action, bouncing near previous consolidation zones and lows around 129. The 50% retracement from the February lows up to recent highs. RSI's oversold. Looking for a follow through this week in small caps. Breadth did give us a reason to be bullish last week. There was always the possibility we could run out of steam near the midpoint and create a double bottom before continuing higher, or a dead cat bounce that fails. So keep an eye on breadth indicators, especially advanced decline, as all of these from the S&P 500, mid caps, small caps, and NASDAQ hit extremes that we haven't seen since 2011 on these indices. Many of the stocks on the IBD 50, in this case Abbott Labs, are showing relative strength. These are the ones we are more interested in. Wingstop, probably one of my favorites this week. If we can get through the 65.40 to 66.40 zone, this should continue higher. Finished on a very strong candle. By contrast to other stocks that we just looked at, relative strength to the S&P is climbing sharply. Look for a follow through and a breakout. Money flow is a bit negative, but could go positive. Short-term MACD is crossing as of Friday. Here are some MarketSmith Growth 250 names that I was looking at this weekend. In particular, what we're looking at is stocks that have management. This scan finds management where ownership is over 10%. Typically, most of these companies have 1% ownership, and anything over 5 to 10% is something to keep an eye on. Some have very high levels. In this case, GWG shows up on that scan. In addition, we've ranked these by relative strength. As you can see here, relative strength rating. I'm looking at 99s and 98s, so I want to see that moving higher. In the case of GWGH, that is rising. Okay, and if you look at the weekly time frame, you can see that management owns 76% of the stock. Very unusual. So they believe in the company, most likely. Intelligent Systems, INS, a nice weekly chart. Note management ownership 21%. Let's look at the daily. Relative strength line is climbing, trying to push a bit higher. Fairly inexpensive stock. All right, so keep an eye on these names. Here's that list of MarketSmith Growth 250 names with relative strength ratings in the upper 90s. I like to see that line climbing. In addition, I'm also looking for volume percent change to be high. Like GWGH, you can see volume percent was 583%. PAR Technologies, 100% change in volume. You can see CyberArk on here. IMXI, International Money Express, big change in volume there as well. All right, so check out these names, potentially perhaps setting up going into the last trading day of the year. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter. We'd like to take a minute to thank Crimson for his unselfish gift of time and energy over these last couple of weekends, teaching his 50/50 trading style. Members can access his unique trading experience in the Learning channel, so be sure to check that out. And also thanks to Mikey for compiling it into a reviewable format for future reference. Thanks, Mikey. We really appreciate the hard work. And finally, thanks to all the members who have participated over those last 20 hours of trading sessions. I'm truly proud of the trading room and members. Look for the watch list to be out later tonight. Have a great weekend, and we'll talk to you soon. Happy New Year.